levels, how to get good entries, as well as how to find good entries to ensure that you can capitalize on making profits. That's what we're looking for today. Let's see. Right now, bear with me. I am working on fixing a issue. You know what? I'll put it somewhere else for now. So problem is, I was trying to get the setup. I was trying to get our video on Facebook, but it won't go. So we'll deal with it later. How's that? We'll just put the recording in when we get done. So let's see. And for those of you not watching, joke. I'm still new at this crap, so y'all gotta bear with me. Let's see. Okay. No, I don't need to do that either. Luckily, we ain't got anybody watching this anyway. Not right now. We can edit it later. Yay, I love how this crap does this. Here we are. There we go. Alright, let's get you to the charts. There we are. Now we're at the charts. And okay, so yeah, screw you, just forget you out there. And also, crap, I need to give me a second, guys. I'm trying to figure out how I'm going to set all this up, because I also need to figure out how to get you guys to see the live stream. Unless y'all plan on going to YouTube to see this, to see everything. Yes. Shit, that can wait till later. Alright. Alright, you guys with me? Alright, let's see here. Back over here. Oops, I didn't even transition yet. Ta-da! Okay, there we go. Now we transitioned over. And get you guys on the same page. I was trying to do this before I went live, so this is fun. Alright guys, you can see what I see now. Let's see, let's get out of studio mode. There we go. There we go. Alright, so now we got things going. Let's start talking. Alright. What you're seeing right in front of you is my chart. This is a 1 hour chart, and so far everything you see is simple trend lines. These are little intraday lines that you got going on here, that are a little diagonal, right? Because we're trying to find the bottom of this over bullish trend for that lasted, let's see, 1, 2, 3, 4 days. 4.5, you're going to count this pre-market high, then she drops, right? So we're trying to find where she was going to drop from. So this is why you see all these lines. So what we're looking for today, and forgive me if you're hearing like popcorn or any kind of background noise, it's raining right now, so I was kind of hoping my microphone wouldn't catch this, but hey, what can I do? Anyway, we're going to talk about how to find entry points to get you in certain areas, like right here where this trend line is, okay, maybe around here, and ride this. Where can you get in on these levels? Where can you get these levels that allow you to take a trade? Okay, that's what we're trying to figure out. That's what I want. This is what we're going to learn today, is how to get these levels so you can take a trade and be profitable, because that's the main goal. I was watching a video, and I was told through the video, of course, that if, let me turn that down because background. I was told that a trader can't be 80% right. A trader cannot win 80% of the time. That is a myth in trading. And the truth of the matter is, most people can't win 80% of the time. It's a very few, like less than a handful percent of the time, people that can win 80% of the time. Your average trader does win around about 40 to 50%. And the secret, if you will, on becoming a profitable trader when you're only winning 30, 40 to 50% of the time is how to manage your losses. Cut losses quickly, make sure you take profits, and of course, definitely not over trading. So we're going to go over a lot of this to give you a better idea on what you should be doing. Also, we're going to talk about getting over the PDT rule and making your trades work out better. And when I say get over the PDT rule, I don't mean being able to take more than 3 or 4 trades within 5 business days and think you're going to get away with it. That's not how this is going to play out for you. I promise you it won't play out that way for you at all. So, that being said, let's go ahead and get started. I'm going to see somebody keeps jumping in now. Okay. Alright, so first things first, we're going to get rid of all these lines. We're going to start over from scratch. So, give me a second here, and we're going to get that set up. Any questions real quick before we get started?
Nick, are you recording?
Yes.
Oh, okay. No questions. Just, are we doing the fib extension and fib retracement?
Yes, we are.
Awesome. Cool. All right. No questions. I'll just keep watching.
No, that's fine. No, ask away, because basically that's how we're going to get to these levels that you're seeing here, is how to use these things correctly. Because as we know, a lot of people don't know how to use these things correctly, and they stop using them. They're like, well, this crap don't work, so why would I want to keep using them? It's like, well, duh.
Well, no, it works. Well, I sold early, but there was a 50% play on Tesla. They work. Yeah.
It's like, whoops. Hold on.
Okay, I'll be here. Keep myself muted. If I have a question, I'll ask.
All right. Let's see. Try and get the head. Keep the feedback out. Putting on the other headset on. It says first live stream, and we're already screwing up. Yay! I love it. Let's see. It's not really our first live stream, but hey, why not? We're gonna. If you can't mess up well, don't mess up at all, right? Let's see. And there we go. Now I can hear you guys without it feedbacking. And I think when y'all talk, it doesn't matter through my headset or not. It still comes through the desktop. We'll figure that out in a minute. So, all right. Again, for those of you watching on YouTube, I'm so sorry. This is our first actual study session public, so you're going to see a lot of wonky crap, basically. All right, so anyway, we'll work out the kinks. We're going to work it out together. How's that? That's the fun part about trading. You're always going to work things out together. Clear the whole thing. Let's start over from scratch. Yes. Poof. We're gone. All right. First things first. Let's figure this out. Now, let's start with this. Can y'all see this? Can you see the my time frames here? Can y'all see that? All right. So the time frames that we have here, I have a million of different time frames. The one time frames you want to watch for, matter of fact, let's do, yeah. I have multiple time frames, and the reason why is you need to watch the chart in multiple time frames, and that's what we're going to end up doing when it comes to figuring out where our levels are. Okay, now the time frames I trade on is right here: the 1 minute, the 3 minute, the 5, 15, 30. Let's see, and the 1 hour. The 1 hour is actually this one right here, the 360-day 1 hour chart, and I'll switch this one to the daily chart, which is this one right there. This is when I'm mapping out my pre-market, but when I'm actually in a trade, all you're going to see me use is the 1, 3, and 15, and I'll show y'all why here in a second. For now, let's just go ahead and start mapping out our week for tomorrow. All right, so the reason why I went to a 5-year 1 day, okay, is because I want to see the whole chart. I don't want to see this part right here, right? I don't want to see just this. If you just look at this right here, what's it going to tell you? Right? You're going to swear up and down you're in a bull trend. You're going to be like, okay, you know what? We're bullish. We're going up. We're doing this. We're gonna keep rising to 448 or 450, or we're gonna make a new high of 478.98. Easy there, Captain Cricket. You're going a little too fast. Back out. Take a look. Actually see what's going on. We got 3 peaks right here we got to watch for the most part. And if you notice, we still have a lower high. Until we break this one, we're a lower high. But what if it's the other one? That's a good question. If it did hit above here, above this peak, it's still lower high to this one. However, you have already a confirmational possibility of a trend change right here with a lower high. Okay, lower than this one, still possibility trend change. Now, do I have it so I can show you guys? Give me a second. Let me see. I want to show y'all guys this. I like proof. Y'all like proof? I like proof. I like proof showing. Let me see if I can find it real quick, but I don't want to spend too much time trying to hunt it down. This is kind of like off the whim here, so again, as always, bear with me. I want to prove to y'all that I called this long time ago, and the reason why I say I want to prove it to you is because of the fact that there are too many. I need to watch what the hell, y'all. Yeah, y'all gonna be seeing some wonky crap if things start showing up you ain't supposed to be seeing. Whoa. Like, oh my God, she got the X-rated. I'm kidding. I don't have those kind of pictures. Let's see. Actually, I'm trying to find that call out. That's correct. So anyway, right here. And September 5th, I have it in our server. It's on StockTwits. Same name as you see right here. It's on StockTwits. It's over there if y'all want to take a gander. Let's see right here. September 5th is when I call it out, which is about around this area. Okay, a little after this little peak. I said September 5th at 350 actually. 350. We're going to get the reversal. And I was laughed at and told I was all kinds of goofy. We're going to keep going up from here. Because again, what happens is you got people that'll watch the chart from there, A to B. Okay, like, oh, we're going up. I can see, okay, dummy. But they don't sit there and try to figure out. See, this is beautiful too. I call it over a weekend apparently. I didn't remember when I called it. I keep having to remind myself when I actually made that call out. But I made it over the weekend on a downtrend. Before this move even came up, I said we will not get a reversal until 350 or slightly lower and go down. So how did I get that theory? Okay, how did I know that I could swing calls or puts? Well, in this case, puts because we're up here. How did I know that we could swing puts to 350 and not shake a leg? Well, this is why we're on the 5-year one day chart. Because when you do simple things like research, you find yourself noticing a couple of things. First, we're going to start with this. The Fibonacci's, how to use your Fibbies. Fibbies do so well. So you start right here at the bottom. This is COVID low. Like, what? Why you start at COVID low? That's just stupid. I know, right? Check this out, though. So we go up to market high. All right. Ding, ding, ding. There you are right there. It gave you 348.91. You see that? You see where it says 398.41? So now they're showing 398.41. I see that I'm good. All right, that's how I called it in the first place, saying around 350, maybe a little lower. We actually got to 348.11 is how far down we went. And when I was actually working in another Discord, right, this is when I learned how Furus love to mess with people's money. That just wasn't working all that well for me. They kept saying, when it got down here to 350, oh, it's going to just keep dropping. It's going to keep dropping. Like, no, it's not. She's going to reverse. Sure enough, folks, what did she do? She had a beautiful run up the next day. She gapped down. There it is right here. She gapped down, hit the 350 mark, pulled down a little bit, opened up. Where's she open up at? 349.21, and made one hell of a rally, a $19.40 rally from 350. And during pre-market, and a couple of the guys that I have here that was with me back then when I was trying to help out in that Discord, is I said that you can buy calls here when we was talking about pre-market at the time. You can buy calls when the market opens and buy them 3 months out, and you can hang on to them because we're not going to see this level again until we get to 410. That's what I said. I said you can hold for 3 months out and you will not go wrong. Now, again, how in the world would I know such a silly thing? How did I know this bad boy wasn't going to drop? And instead, here's that little line right here's this. Let me just scoop into here. What's that say right there? What's that say? Oh, it does say 410. Whoops. So I think we did it here too, right? Does that say 410 right there? Does that say 410? Yep, it sure did. Whoops. So I'm going to show you how you can figure these out. That's what we're here for. That's what the study session is for. The reason why I'm giving you these now is so that way you can learn how to do this yourself. The point of being a day trader and even being in a community is to learn how to be independent. I know that sounds counterproductive. Why am I going to join a community if I'm learning how to be independent? Because when you join a community of independent traders, then you're no longer susceptible to their influence, but you are going to listen to what they have to say because they are viewing the chart very similar to you with an objective mind. If you start thinking biased, then of course you're going to have a biased opinion on a certain move, and then regardless if it goes wrong or not, you're going to be stuck on that bias. As a matter of fact, there's one trader, he did the exact thing. He got so comfortable in his trading, he allowed to be so biased that he allowed a trade to go back on him, and it cost him roughly around $6,000. Not once did he think in his head, for some strange reason, that I need to cut profits. This is not going my way. Okay, and he openly admits he was wrong. He openly admits he did wrong. He did not follow the rules, and that's what happened. And that's why I love this guy, because the fact that he's quick to admit when he's wrong, and he finds where he's wrong. And that's what I'm trying to make sure you guys get to do here in learning. So now that we know that 350 was why we bounced there, no, it wasn't because of news. No, it wasn't because of feds or people jumping in or whatnot. You got people that have a lot of money and control of a lot of money is what I should say. Says, you know what? It dropped enough. This bull market, right? Let's back up again, because I said get everything explained so you guys can understand how this is all playing out. This bull market was overextended. This is not a normal trend. This thing went from down here to 218, all the way to 479.98 in less than 2 years. Look at this, less than 2 years. You can't tell me that wasn't overextended. And of course, it needed a pullback. So what is the pullback? Pullback is called a resting period. This market needed to rest. In order for it to keep going up, it needed to rest, not crash, right? This over here, this COVID thing, this COVID crash, that's a crash. When it just looks like it just got pushed off a cliff and it just waterfalls, okay? That's a crash. Now, is it a market crash? No, it's not a market crash. It's just a crash. It just, the market said, it just said splat. And said, oh, okay, we can go back up. And then, of course, the $2.5 trillion didn't help with this overextension that we had, because that's what they did in this area. The Feds decided to dump in $2.5 trillion into the market, and wham, this thing just said nutty. So you do have to also understand that the market had to pull money, not the market, but the Feds had to pull their money back out. So, duh, we're going to have that pullback, okay? And I'm going to show you our neat little trick of how this pullback was actually predicted over 20 years ago. Think I'm kidding? Stay tuned. I'm going to show you. And this is also how you find levels that work out so well. When you realize that not just the SPY, because the SPY is a sector, of course, but you have equities that love patterns. They love certain patterns. And when you see certain patterns, all of a sudden you notice once you start finding these patterns, trading comes a lot easier. You don't have to worry about news. You don't have to worry about all kinds of mess that gets in the way. You can just find what you're looking for. And that's within the patterns. Because as far as day trader goes, news is not our business. We don't care about the news. We care about the patterns. Point A to point B, that's where we make our money. Now, if you're in this like penny stocks, news matters because they're low floats. Low floats means retailers have control over those. But we're talking about stuff like the SPY and mid to large cap stocks. So, though news does look like it moves the market, I promise you a lot of the times the patterns are giving you an idea of what it's going to do regardless of news. And we'll continue this now. So anyway, so now we need to figure out where we're going. So this one, I'm going to talk about Fibonacci extensions. I showed you the Fibby, now we're going to show you the Fibonacci extension. So right now we're going to, this is how we do these. We're trying to figure out what we're looking for. So I'm going to take this little lower point here, right? And now we're going to go up here to this high point here. Boop. There we go. So now I'm seeing what I'm looking for. This trend says the potential move to this trend, okay, of the downtrend is right there, 398.50, 393.01, right? Now, do we want further than that? No. I hear it now. Why do you don't want more than that? Because I want the meat of the move. I do not want to try to get, I see the fib says 393.01. I'm not going to try to go all the way down here to 384. That's ridiculous, okay? If you don't have a trading plan, you're gambling. So let's just get that straightforward. And I guarantee a lot of y'all, whether y'all watch this now or further down the future, I guarantee a lot of y'all don't have a trading plan. Y'all see a possible pivot, you jump in, it fails. You're like, this damn market, it ain't doing nothing for me. I can't. No, it's just you. It ain't the market. It's just you. You're gambling. That's all it is. You don't understand this down here, which we'll have a short session on this, but this is not part of the class of this session yet. You don't understand volume, no matter how much you think you do, right? Majority of people really don't understand volume at all. That's one of your problems. Second, you don't understand price action, okay? That's the two things you don't understand. So the minute you start blaming everything but yourself, remind yourself, it is you. It's not the market. It's not the money makers. It's not the news. It's not the pattern. It's not people stop lossing and chasing you. It's you. It is definitely just you. I promise. If the moment you get that through your thick skull, the moment you're going to start making money. Okay. So let's put that out there right there now. So anyway, so now we got that move. All right. Now I see we've made it to there. So what about here? How can I find here? So guess what? We're going to use the Fibbies again. What? Yeah, we're going to use the Fibonacci extension. Why are we using these? Because they do so well, that's why. Watch. Do, 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 do. Coming down here again. Boop. So, what I'm looking for is right there, 397.50. I can't speak. 397.59. All right. Based off this move here, my only objective is to get to that point. Now, of course, we're looking at the daily chart, right? So if you're swinging, would you buy 397.59s? I bet you're asking that. So should I just buy 379.59s and just let it sit and wait until it hits? Well, if your expiration is far enough out, yeah, you can do that. Will you make a lot of money? Nope, you will not. Because of the environment that the options sit in, you will not make that much money. Not unless it just decides to run, Sally, run. You will not make that much money because of these pullbacks. These pullbacks is why you won't make any money on it, because when they pull back like this, your premiums are dying, okay? So how can you make money on options or the equity in itself, right? Well, if you make, you can make money on the equity. If you see it down here, you get in right here at 369.42, and you ride this bad boy up, okay? And then, of course, when you drill down to a smaller time frame, you'll know when to get out of this, all right? Even on a daily time frame, check this out. Even if you're on a daily time frame, you get in on so we're in this there, so we want to get in. We get in on this candle. That candle right there, we got a nice gap up. I want to get in on this candle right here. Cool. So we're swinging. We're going to swing our options. So you get in on this candle. Oh crap! Right? You already get a gap down. Crap! But pre-market is showing you, as well as the market itself, saying, "Oh, don't worry, you're going up." All right, cool. Stop losses. What do you do about stop losses? Well, if you get it on this candle, obviously your stop loss needs to be at 369.42. Luckily, you didn't get popped. So you go up, you got another nice gap up. Day runs well. Day runs you an $8.72 day. Cool. I want to start locking in profits. But where do I lock in on profits? You know, that's a good question. I don't know if I'm going to lock in on profits. I know she's going to pull back. Why do I know she's going to pull back? Because of this. The SPY has an average price range between $4 to $6. Okay, every once in a while, you'll see her pop around 3 or less within like once or twice a month. You know, sometimes maybe 3. Well, that's the average price range. That's price action. This is double this price action, you know, from 4 to 8.72. So I'm automatically expecting a pullback, especially you got 3 gaps. Basically, very bullish, right? There's one of the rules I love. When you have 1, 2, 3 green candles, you need to start thinking about selling. You get to 4, your consideration needs to get a lot higher. When you get to 5, with the candle that doubles every single candle previously, you need to be finding your exit door, okay? You need to start looking for stage left and get the heck out of Dodge. Now, so what do I want to get out at? Well, I'm going to let this thing run. And of course, I'm going to go ahead and put my exit right here, half of this candle. Am I leaving profits on the table? Yes. I don't know this is not going to go. I just know she's going to pull back. But I definitely don't want to wait and let it pull back to here. That's just silly. So I'm going to take at least half this doggone candle because I'm down here. I got in at this one. Okay, so I'm going to take profits. I'm going to lock in here. I don't mind leaving the rest of this on the table. Sure enough, she gaps up. Oh, cool. We gap up. We're starting to pull back. Now I'm going to change it. Now I'm going to change it before this candle even forms because this is a daily candle. I see we gapped up. I see we pulled back. I want to lock in more profits. You see this little purple, purple. I'm blind as a bat. You see this little green line right here, right? This little green trend line dealio. This is where I'm going to put my stop loss, okay? So I'm going to put my stop loss on this green candle because remember, all this isn't here yet, right? We gapped up. We're kind of dancing up here right now for the first couple of hours. So I'm going to put my stop loss on this green line in this green candle, 388.41. I'm locking in my profits. I'm just not filling it, okay? If she goes up, great. If she don't, no big deal. What she does come down. Actually tags me out, gaps up again, it moves up. I bet you thought you sold too early. But when the day finishes out, you're being thankful, grateful. Now again, we're still playing with the Fibonacci extensions. So we see that we have 1, 2, 3. Okay, 3 days here that she said, go ahead. Somebody's about to ask something? Okay, guess not. So, 38.2%, you're seeing that she's holding here. Okay, cool. I want to get in on this again. Okay, now we're swinging. 2 days here, third day pre-market. I see it dips down. Cool. I want to get in at the bottom of this candle right here, which is also the top of this candle over here, right? June 21st, which is also the top of this wick. I want to get in here. On the third day of this consolidation, staying above 38.2%, I want to get in. So, of course, I'm leaving all this on the table because I don't want to get caught if this thing breaks under 374.81, decides to drop down. I don't know what's going on to the right. I don't know if any of this is going on right now. If anybody, y'all watching this, you're like, of course, you just buy, just hold. No, you can't. You don't know what's going on to the right. The right don't exist. Okay, that's how you have when you go to read charts, and put this in your notes. When you're reading charts, when you're trying to find patterns to get a hold of, yes, you see what's going on to the right because, of course, you see the whole chart, but get it out of your head. Find the setups. Oh, the setup here. 3 candles here, all side by side. It's a potential move to the upside. Well, obviously, we see the results to the right. It does go up. Okay, good. So now we need to pretend this crap don't exist. So where do I get in? Studying. Matter of fact, let's do that. Let's make all that disappear, right? Whee! Poof, it disappeared. So, this is going good. We're stopping right here at 78.6%. I see we're holding from this level. Oops, hold on. I'm sure somebody's screaming, it's not touching the candle. Okay. There we go. Now it's touching the candle. I just got that. So anyway, remember we bought in at this. We bought in on this candle because of the green day. We kind of got held. We got stopped out here. Okay, it hit here 78.6%, but now we're back at. Now we only pulled down to 38.2%. All right. So do we get in here? No, we do not. I want to see what this goes. This is a doji. You never want to get in on a doji. If anything, you want to get in above the doji, right? But of course, she gaps down at the end of the. Actually, she gaps down a little bit. End of the day, drops down further. What about here? Would you have gotten in here? Right? Well, aggressive traders probably would have. A lot of aggressive traders. I can make a lot of money for 376 to 380. Yeah, actually, you can. If you're a day trader, you would take this trade. Okay, it's a $7.09 range. You can make a lot of money in this little range, this little nugget right here. But for people like to swing trade and whatnot, you want a better setup. So personally, I want above this candle. All right. So this one pulls up. $7.09, a little too much for me. That's too much for my blood. So she might gap up, but okay, I'm gonna wait her out. She gaps down. So if you would have bought up here at 380.82, and I'm sure a lot of people did. A lot of people bought right up here, right? I'm sure people bought. Let's say everybody's just a great trader, right? Let's say everybody was swinging right here at 376.47. It got to 376.47. It held. We said we got up. Oh, if it can hold above 380.82, it can go higher. Yes, we can win this. Woo! We're biased. Oops. Everybody got burned because she gapped down. Okay. This is things you have to watch out for. Things you gotta be careful for. A lot of people don't have stop losses. They don't use stop losses. They think they're getting stop loss done all the time, and that's what happens. Okay, so the more patient you are, the better off you're going to be. I guess I didn't pull the rest of that off. Didn't go that far back. Yeah. So anyway, me as a patient trader, and you can utilize this for intraday trading. Same thing. It's no different, to be honest. It's really no different at all. But if you got in at 380, 380.82 this time, you got the break and she goes up. You get in down here at 376.47. Just this 3-day range, you can make money. Okay, and pull up. But let's go, I digress. Anyway, the whole point of that was to make sure you trade like you can't see. Well, when you're charting, make sure you can't see everything to the right. Because, like I said, we were down here just mapping this little piece out. And sure enough, she goes a lot higher, right? Y'all forgot about that, didn't y'all? Y'all forgot this whole thing went all the way up to here. And we were just right here. See how quickly y'all forget about what's going on to the right when you get rid of it? Uh-huh. All right? So, make it disappear. Study that chart. Then pull out. See if you're right. Nice. Mark it down. That's a pattern I want to save. Okay. Anyway, back to the Fibonacci extension. So anyway, we got up here to 399.25. Cool. That's our target. Now, can you make it? Can you get up to there? Yeah, you can get up to there. Watch this. Let's get rid of this fib. Right? Why are we using fibs? Because the person who created these silly things saw something. And when you learn how to use them, you find that you can see the same thing they saw. And when you start seeing what they see, I don't feel like that gave me the fib. I think it gave me an oval. All right, there we go. If you start seeing what they see, then you're like, all right, cool. I can do this too. What? Can you do this too? Yes, you can. Boop. There we go again. This moved to here. Where do I get in? I get in here on this candle because obviously, right? Obviously, when we're charting this out, okay, let's zoom in this little block here now. Obviously, when you're charting this piece out, this candle and everything to the right don't exist yet, right? We're pre-marketing this, right? We're trying to figure out the possibility of where she can go. Okay, that's what we're trying to figure out. And again, the more we figure this out, the more we can start finding our levels. Oh, you thought just drawing levels is going to be easy. Oh, that's funny. Look at you learning something new today. No, drawing levels is not just sitting on a chart and going, oh, if I draw a line here, it'll obey that line. Huh. No, that's when you're losing. Let's just make that clear. That's when you're losing. This is called analyzing the chart. How long does this take? It takes forever. Oh my God, it takes forever. Until you get really good at it, it takes forever. But that's the best part about it is that you are spending hours studying a chart versus spending tens of thousands of dollars losing on a chart. Okay, that's where a lot of people screw up. One of my mentors always asks, almost every day he's asking, how much are you studying? Are you studying right now? Are you studying hard? What are you doing at 11 o'clock at night? What are you doing at 9 o'clock at night? What are you doing at 9 o'clock in the morning? Are you studying or are you playing around? You out drinking or are you studying? Right? Dedication. How dedicated are you? And granted, I've never studied as much as he is always asking. You know, I think I sent my message like 2 in the morning. That's all because I jumped up to had to pee. I said, dude, I just got up to pee. I'm going back to sleep. It was on a Twitter feed. I was like, I am not trying to be studying at 2 o'clock in the morning. I'm going back to bed. Okay, I'm dedicated, but I'm not a lunatic. There's a difference. So, but how long do I study? Well, rule of thumb is 10,000 hours. That's the rule of thumb. If you're willing to put in 10,000 hours in this field of business, you will become profitable at the very least. I was going to say you can become a master at it, but let's stay humble with humble beginnings. You'll become profitable. 10,000 hours will get you there. All right, that's how long. So let's get that through our heads. It takes 10,000 hours to get to where we want to be when you're starting out. So when you're starting out at minute number 1, and you get to hour number 3, and you think you got this down, you think you can do this. I'm telling you now, you're being delusional. and a nutcase. So stop it. If you're 4 months in, guarantee you're not, you don't have 10,000 hours, because you rather sit there and try to learn during a trade versus learning like we're doing now, right? And when you're learning now versus the market, this is when you're going to make your discoveries, not when you're losing money. You're going to be too much in your feelers. I guarantee you're not even doing a doggone journal. You're not writing down how you lost, why you lost, what happened during this trade. You ain't writing none of that crap down. You're too busy cussing out everybody but yourself. So, again, yeah, you can't just draw trend lines. This takes time. This takes effort. This takes studying. This takes education. So, and I continue from zero, because we come from this bottom of this candle. Now, I can hear it already. Does it really have to touch the candle? No, not really. We're just trying to get a roundabout idea of where it's going. It don't really need to touch the candle. But for those of you that might be a little OCD, hang on. Let's see. There we go. We're going to stay off the candle. Yeah, it's for the OCD. Let y'all freak out. Ah, no! It's got to touch the candle. So, okay. So, we're going to be here a minute. So anyway, so we're looking for our chances to pull up. Now, will this be correct? Ooh, good question. The answer to that is we won't know till the next day. Ta-da. So we get in here, we get this green day, right? So we got all the way up. Potential move is to 419.99. Now, what about 430? It got to 430. What about that? I don't care about that. All I care about is this extension telling me the possibility, the probability of where it's going. Okay? That's all I care about. Now, as long as I continue to use my stop losses, as long as I continue to follow volume, right? And we'll continue to reiterate this, volume, because volume is what makes your candles, people. In order to understand price action, you do need to understand volume. Volume is what creates your candles. Your candles is what creates the patterns, which also creates your buy setups. That is the wave of the charts. That is how you trade. Follow the sequence, follow the money. Volume first, candles second, pattern third. All right. Volume and price action is all you need, but understanding the sequence will help you get there faster. So that's why 419.44 is what I look for. Now, swinging, this works out great. Okay. But seeing hesitation at 78.6% tells me that I need to get my butt out. I'm not going to make it to 419.44. Why? Because of the hesitation she's having. Okay. If I get in right here at 399.45 because of the gap up, and I'm pretty sure pre-market told us that we have a good chance of moving. I got my stop loss in. Stop loss is right here at the low of this candle, 394.05. Entry is let's say 395. Okay. Maybe even 395.50. You know, it's just somewhere around there, ballparking it, because you know we see a good setup, we take it, and she moves. She moves a gorgeous $8.83. So I want to swing it. So now I want to put. I got the Fibonacci extension out. We got over 23.6%, which is 397.53. I'm gonna lock in profits. Is that a lot of profits? No, not at all. But if you have one or two contracts, that's a lot of profits. That's actually a little over $300. Good news. Those are called single wins. Learn to take them. I promise you, single wins will build your account. Trying to go for 100% every time will cost you dearly. So always be comfortable taking single wins. So if this decided to pull back, okay, and take me out, guess what? I've locked in the single win. I'll be happy walking away with $300 for that day versus losing $300 for the day. Okay? Take the money you have in your hand. Don't wait for curtain number 3 to finally open up and hope you get more money. That's just silly. By the way, that's the definition of gambling. Just a nice little reminder there. So, We lock in at 23.6%, and that's around 397.53, and we're going to swing it till tomorrow. So we swing it in tomorrow. She gaps up. Nice. Pre-market probably obviously says something about this going to drop. Uh-oh. She drops. Cool. You know what? No big deal. I'm going to go along my day. Why? I've already locked in profits. This little nugget down here, this half of this candle, I've already locked in profits. I'm going to leave it alone. She moves, comes back, keeps on going. Nice. We got to 50%. All right. She goes up to here. Before I can get to 50%, guess what I do? Right? I don't want to forget this step. Guess what I do? We was at 23.6 is where our stop loss says. She drops the tail, brings the body back up to 38.2%. Guess what we do, folks? Lock it in. 401.72. We lock in profits. 401.72. She goes all the way up, all the way through the day. I'm pretty sure she chopped around, I'm sure. I can drill this down to the hourly. I'm sure we'll find that. But she moves all the way up, gets above 50%. So, again, what do? Well, you have two choices. If you want to get a continuational move, you got to give her room. You got to be willing to leave money on the table to make money. You've already locked in 38.2% at this point. Well, according to the Fibby, it's probably not that much up, but you know what I mean. So, anyway, you're locked up at this portion of the Fibby. So, of course, good. We gapped up. Dude, you're living high life. So what do? We gapped up. She pulls, as she's pulling back, I'm locking in at the 50%, 405.10 at this point, locking it in. So, of course, we go up. We got that first tap. Uh-oh. We're hitting 78.6. All right, no big deal. My stop loss is still at 50%. Why am I still staying at 50% instead of moving it up to 61.8? I'm in profits. I'm in good money right now. I'm looking for this at this point. Just because I get stomped out on one doggone candle don't mean nothing to me, right? You're going to have a pullback. Hell, we got 3 days of going up, so of course we're going to have a pullback. I'm expecting a pullback. I want a pullback, all right? So pullbacks mean I can make more money. But in this case, things got a little fishy, okay? So so we hit our heads here. We closed up. I'm thinking we might either open right at or maybe above again. Keep kind of pushing. But okay with the pullback if we get that. Kind of like this. Kind of pulled back down here and kept on going. I'm okay with that. So anyway, she gaps down, stays above 61.8, taps it, pops back up. This is your second rejection on a daily chart. Now I'm getting cautious. Okay, now I'm starting to wonder. When I see rejection, I start looking for the exit door. Okay, do I move up to 61.8%? Not yet. I want to see where this is going to go. I'm still okay with my 50% from down here to 50. I'm okay with. That's profits locked. All right. So I got a few days worth of I got a couple of days worth of gains here that I'm sitting on. So here we are. Actually, almost 3 days worth of gains. So anyway, what'd she do? We closed up here, gapped down here again. Now we're under 61.8%. My thesis states if we can't stay above 408.49, we will drop. So I'm getting kind of cautious now. Says what'd she do? She gaps down. She opens up here, gaps to here, moves up, bangs her head, comes back down, closes right here. 408.06. Okay, closes at 408.06. All right, I'm actually expecting to get stomped out now. All right, I'm expecting this thing to gap down at this point. So, kind of curious. Getting ready, knowing I'm going to have to get ready to start locking in profits come market open. Because when it comes to options, you cannot exit your position during pre or post market. Okay, I believe some platforms allow you to exit your position 15 minutes after market closes. But for me, I just stick to the basics of once 4 o'clock hits, you better be able to you better be ready to ride it out. Okay, you better be able to ride it, cowboy, because it's about to be a hard one. So I'm willing to. I got my profits locked in. I'm good. I want to see how she plays out. So of course, nice. She moved up. We went up. We got above 78.6, but I'm not all that I'm not all that confident. I see 3 rejections. So as far as I'm concerned, guess what, folks? I'm moving up to 61.8%. That's where I'm moving up now. Because I'm going to lock in some more profits. I don't know if she's going to, I want to see what she's going to do right here at 78.6. If it comes back to 61.8%, I'm going to get my ass out of Dodge. I'm locking in all this. I'm locking in now. Okay? I'm good. I'll wait for something better. Well, in this case, she kept bouncing around. All right? Drops down, not all the way. Woo! Made your butthole pucker up on that one, didn't it? Got a little close. Came up, moving around. This one really probably would have shook you out. We cannot get over 78.6. A lot of scared traders, and let's make sure this is clear. There's nothing wrong with being a scared trader. If you're a scared trader, get out. You're seeing a lot of rejection right here at 78.6%. If you can't hold, well, since you got in, remember at 395.50, you're holding all the way up here at 408.49. You're sitting in some good profits, especially with just 2 little contracts. You're sitting in some nice profits right now, and you can't hold. It's okay. Now, I can hear it now. Somebody's asking, how you know you're in profits? Because when you do options, right? You want to make sure you buy in options when you're swinging. You're either in or at the money. Okay, what is at the money? At the money meaning is that if the price is at 409, you're going to buy at 409. In the money means if you're going up in this case, you'll buy at 408 or 407. You buy your strike price is 407. Okay, and then that means you're in the money. You're $2 in the money. That means your theta is not going to burn you out. Delta is going to help you out as long as you go in the direction that you're going for. Because when you're buying a contract, you're bidding on the direction of that move. That's the point of the contract. So as long as she's going in your direction, right? In this case, you're buying calls. You buy in at let's say 408 because we got it for 408. You're losing money. You buy it at 390. You buy it at 397, 398 because you bought because your entry was a 395.50. Okay, so your strike price is 397, 398. One of those. That's how you make money. Because the deeper in the money it goes, the more money you make. Now, I'm pretty sure I lost to some of y'all when you heard delta and theta. That's okay. We'll touch on that another time. Right now, we're just looking for patterns and trends and how to find levels to get our profits. Believe it or not, options is not as hard as people make it out to be. And we'll actually do a nice little class on that here soon. And get y'all familiarized with all that. So anyway, so back to what I was talking about as far as scared traders go. If you're scared and you're afraid that she's going to reject here and drop, that's a natural fear. Get out. Go ahead and on one of these 3 days, right, get out. Especially like this one. Let's say this one really shook you out. This one right here, your wick is longer than your tail. The body's about medium, about small to medium. And then, of course, we gap down on a red day, and then we automatically start having a red day, really. I understand if people wanted to get out here. You know, I'm not going to wait for it to come back to 408.49. I want to get out here. Somewhere in here, I want to get out. You know, I want to wash my hands. Forget this. I'm out. I'm done. That's okay. Do not let anyone tell you you sold too early. Do not let anyone tell you sold too late. You got out when you're supposed to get out. Okay, that means you have hit your threshold of your holding muscle. Okay, you've made profits. You're ready to step away from the table in a sense. So there's nothing wrong with that. And don't let anybody tell you otherwise. There's nothing wrong with being a scared trader, especially when you're a profitable scared trader. Okay, this is more than enough reason to get your ass out of Dodge. All right, I kid you not. It really is more than enough reason to get out of Dodge. You have 1, 2, 3, 4, 5. 6, 7 candles that could not stay above 413.30. What do I mean by stay above? Not one candle, wick and or tail, could get above and stay above it. Okay, not one. So I'd be getting 7 candles tells me I think it's time to say stage left. See you later. Taking my money. Bye. Anybody that bought calls from in here to here, tell you right now, they're gambling. Okay, that's the truth of the matter. They gambled that one. All right, I guarantee a lot of people that bought puts on this got fried. All right. So that's just, you don't. There's just no other way to put that. There's just, you don't. You look for data. Data tells you what you need to know. All right. So anyway, because I'm a conservative trader, I still have mine at 408 and 49. That is spooky. But I'm okay taking profits if she gaps down and puts me under here. I'm okay taking profits because profits is still from down here, 395.50, up here somewhere. So that's still good money. I'm okay with that. I'm okay with a potential loss because all the money I've already have set, I've already have locked in. I'm good. All right. If sure as I ain't gonna hold and wait for it to pull back, that's just silly. If she gapped down, as soon as market opens, I'm getting out. Unless she spikes up, then my stop loss will go where the market open was. So if she tries to spike up like this wick here and then comes back, guess what? I'm getting out where where the body comes back. Forget that mess. I ain't holding. All right, I'll give her a chance to pull up. She's gonna pull up. But if she's gonna pull up just to pull back down, stop loss set. You take me out when you're ready. All right. So anyway, in this case, this didn't do it. It actually made it to our target, 419.44. Now, this is great. We actually made it to our target. But again, you have to ask yourself, can you hold that? Right? A lot of fear got put into this. A lot of people got burnt on this. So keep that in mind. That's the only way I can put that. Keep that in mind. Remember, you don't know how this is going to gap up. This is a SPY. You don't know whether she's going to gap up or gap down. All right? You have to make sure you can pay attention to this stuff. So, as you see, before I even get this Fibonacci moving into the next direction, I see 419 is a definite significant level. Why is this a significant level? That candle right there. That candle is a $14.71 candle. That is something I'm going to put in my list of candles I need to watch out for. 419.44. I'm going to drop it. I'm going to drop a level here. I'm going to shoot this bugger to the right until it gets to today's prices, because that's a significant level for me. I want to know where that's going. So I'll tell you what, let's do that now. Why is this a significant level? I'm sure you're asking. Well, one, we hit our head here on previous day. We opened up here, dropped. But check this out. Shoot to the left. Look at that. All right. Look at here. Right off of it. That is what we're looking for as far as levels. Fibonacci extension gave us a certain level we can look for. So we're going to mark this right now. Now I need to edit that stupid thing. It did not lock in at the right spot. So make sure you do the same thing when you do these, because it's a lot easier also just to edit it. Excuse me. Then I sit there and try to get this doggone thing to actually work in your favor. It's not worth it. Let's see. That's a little too far. There, September 15th. There we go. Shoot. Pew. There we go. So there we go. 419.44. So let's back out of that for a second. Why don't we zoom out? Because I want to take a look at it. I want to see where she's hitting on our chart. That's why. So there it is right there. Look at that. Looky, looky, looky. That's interesting to me. So we're going to get down to here in a minute. But this is now a level that is set in concrete that I can look for. Okay? And those of you that are with me on Monday through Friday, y'all are really getting tickled right now because of what I called out in our channel, on our trading floor, what I called out. So, there's your something right there. So let's get back into here. Let's get some more. Excuse me. Let's find some more levels. We found one. We got a few more to go. And now we're in. We found one level. We're almost there. So look at that. I mean, look how silly this is. We're all into this portion here. Look at that. It's just nutty. All right. Now, a lot of the traders that are new, that are not new, knows how to do this a lot quicker. But I'm going over this for a lot of you that don't know how to find these levels and don't know exactly how to set these up. That's why I'm kind of going like I am, giving you an idea to actually the fundamentals basically on how to figure these out. Because if I don't, if I just showed y'all the quick way of doing this, you're going to be completely lost. And then you're going to be like, wait, how do I do this again? I don't want that. I want you guys to figure, to see how I'm doing it, to find a better, to be able to mimic it, basically. Because you ever join, whether it be a webinar, seminar, whatever the case may be, like, oh, I'll teach you this and this and this. And they give you a lot of stuff, right? They give you a lot of information, but they don't tell you exactly how to do it. Right? You ever notice that crap? Right? Don't that irritate the living snot out of you? It's like, why couldn't you just tell me? You know, it's just. So, yeah, we're not doing that here. We're going to show you exactly how we find what we're looking for. Because that crap is just retarded. So now we're going to pull all the way out. Now we're coming back over here. Check it out. Ding. Now we're trying to find some more stuff. We're going to try to find some more stuff here. What can we find? What can we find? Let's see. All right, this is, there we go. Though we're nowhere near it, right? 376.20. Why is this significant? Okay, because the open near this candle, how these continue to react to it, this candle right here, this hammer, right? All of this is telling me that this is significant to me. All of that right there. So that's so I want to keep that in mind. All right. So if you notice, right, even with this fib, see how close it was to the other one that we had? 419.44, now 418.52. See this area, right? So something to keep in mind. So when you're looking for 419.44, right? Let's say you want to swing, starting Monday. You want to swing Monday. Monday, as long as you can get over 410.44, you want to swing, let's say a month out. Let's see. We got any here. Took 2 months. Let's see. We got here. Took us about a month. So from here to here. Yeah, I'd probably do 2 months out to be safe. The more time out, the better, but just make sure you're in the money when you take your options, right? So let's say you wanted to swing calls come Monday for a couple of weeks to get to this price target. All right, you want to make sure you're over 410.44. That's the first thing. And right now, SPY is at 408.76. Let's say 408. It's $1, just shy of $1 under where it closed. So looks like she's gapping down. Now, gap down, does that mean she's going to go down? Nope, not at all. But we're going to show you a neat little secret here too, as we continue this nice little journey on how we're going to draw out our levels. Next level we see is 1044. Let's get our leveler out, right? Let's get our leveler. See, all right, reason why. See this right here? That candle? This one? That one? See that long candle right there? What is that? That's $11.42 range that opened at 1044. That's significant. Why is that significant? And I promise it's not because I called it way down here. Why is that significant? That's because it keeps hitting there. That's a double top, right? You like patterns? That's a double top. So then, of course, you see all this jumbling up right here. See how she comes up? She kept staying above it, got down, got back above it, right? That's significant. Look at this. See the reaction around this price range? That's significant. Y'all starting to see why I look for these type of levels? You see why I use fib extensions to do this? Right? This is about the easiest way to do it too, I'll tell you that. The way I actually draw my levels, it's a little bit more complex. This is about the easiest way I can actually teach how I do things to make it easier for you guys to mimic this stuff. Now, when you draw your level out from here, you see what I'm doing on the calendars? Pull it back. See that? Pull it back. Make sure you give yourself room on that calendar. And you'll see why here in a second. Come back here, you. There we go. I want a few months out, each direction. Actually, I want years out the right side. Hey, speaking of, I just noticed I didn't do that one. Doot, doot. Yeah. Boop. Pew. All right. So here's the reason why. Let's back out again. We'll leave the fib up so we can get it. See, look at that. Ta-da. See the reactions over here? See that? Look at that. 419.44. Look at the reactions right there. Look at those reactions. Right here. 410.44. Look at that. Look at that. Just by drawing Fibonacci's. Way over here. Whoops. There's nothing. Oh my God, there's nothing. The chart disappeared. The world is over. Alright, so here we are. What are you doing? Nobody wants you. Go away. We know it's raining. So anyway, just by doing Fibonacci's right here in this area, look at them. Look at the silliness. How it just gives it to you over here, right? It just shows you why they are so significant. I hope you guys are taking notes. I hope you guys are learning something here because this is very significant as far as what we're looking for, how to draw up lines, how to draw up levels to ensure that you become a profitable person. Because unfortunately, people don't know how to become profitable. People don't know how to find these type of levels. And again, they blame everybody. They always blame everybody. You know, it's never their fault why they can't make money in the market. It's everybody else's fault. It's everybody else's doing. It's never theirs. And you got, you know, and that's what today's lesson is. How to find levels, how to find entry points, exit points, and how to actually properly use these Fibonacci extensions because people don't know how to use them. Anyway, so let's see. Let's keep looking and working. I see that. I still like this 376.20, but I'm gonna keep that in the back of my head for right now. I'm not gonna map that out yet. Alright, so there is a pattern I know, like my students are seeing right now, right? There's a pattern here they're seeing that tells them that this up here, 419.44, is very probable. Don't you guys? I know y'all see it. We talked about it last week. Let's see. Let's draw. Let's get another. There we go. All right. Let's do here. 418.31. That's close enough. Let's see. Just kind of walking around. Just if you have any questions, go ahead. You know, unmute yourself. Ask. You know, by all means, ask. Let's see. Y'all see that? 78.6%. Look at that. Yeah, y'all should be able to see my crosshairs. If you can't see my poor little mouse, my mouse is apparently camera shy. It doesn't want to show itself sometimes. Y'all see that? Y'all see the reactions right there? So obviously 415.15 is something significant to us. So what do we do? I don't know. I think we draw a line with our crayon. You're right, little Timmy. We do. So, let's see, drawing our line. Now, a lot of y'all probably thinking, oh, great, we got 3 in. Are we almost done? Ha, that's so funny. Aren't y'all cute? No. Because we're still on the daily chart. We still got to drill this bastard down to the hourly chart, 4-hour chart, hourly chart. Oh my God, it's so much. Yes, it is. But if you're willing to put the time in, how much you can learn. That is the great part about it. Remember, 10,000 hours will get you to becoming a very profitable trader. Hey, what are you doing way over there? Come back here, you. Oh, that's what happened. Yeah, that apparently has something I did. Doop, there we go. All right. All right, let's see. Now, I bet you're asking a question, but you're not. You're not saying it out loud. What if they go the opposite direction? Well, did you know these little silly fibbies can go the opposite direction too? What? And also, did you know that they can either confirm or give you a different outlook on certain levels, like where a trend can go? Neato. Doop. Doop. Did we do this already? Yeah, we did this already. So, did we do this already? Yeah, we did. That's where we got 1044 from. So as you see on this trend, right, the potential price target was 383.53 off this Fibby extension. So yes, they do go the opposite direction. And that's why we do this. It's because we go both ways. Why do we go both ways? It's fun because it allows us to stay objective. It allows us to be able to see the chart for what it is, a chart. Money moving around. This is the biggest transferring system in America. You can transfer thousands to millions to trillions of dollars in seconds. Okay? So why not take advantage of the one thing that will make you more money than anything? Objectivity. So we hit our 100% move down here at 383. That probably explains why one of our guys kept screaming 380s. Oops. So we did this, right? It said 424 was the potential 100%. You know, let's put that back and let's mark that price down. We didn't mark that price down, did we? So we want to mark that price down. Let's see, because we already made 100% here. Now, what if she does go back the other way? Well, I'm gonna show you guys this. But right now, y'all watching me work the fibs like I'm doing right now gives you an idea of how to draw out your levels that are more significant than any crap you've been doing. I promise you that, right? I mean, come on, let's be honest. I bet half the crap you're pulling, it's based on your bias. It's not even based on any actual data. Just, okay, we hit here, so I think we're going there. But you want to tell me why? You want to get a better idea, a better understanding of why you think it's going to go there, other than the fact you say it should, right? You know, I need data, people. I need to know. So now, people have said that my claims are bold. Oh yeah, they're definitely bold. But my claims, if y'all come join our little server, our little community, we're still a very small community. I like it. I like a small community, but you know, of course, we need to eventually grow. Um, my boldness is very rarely wrong. I believe one of my guys has deemed it. I have a 80% win rate. I think he's what he said. Funny part is I found that insulting. Let's see. So why do we drill down into here? That right there is why. This move, this S curve. This is an S curve, by the way, people. Something I probably should be explaining this as I'm doing it. You get this green trend. This is a micro, but let's just stick with the regular S curve. The S curve is basically when you get this trend up, a pullback, and then a continuation. This is an S curve. This S curve has been completed. 411.27. Funny part is I called that. I called that while we're still, I think, yeah, we're down into here somewhere. When I called out saying, where'd this go to? High 404.35. Yeah. I called it right here somewhere stating that we were going to get up to 411.27. I might need one of you guys to correct me. I don't think it was 27. I know I said 411 something, but I don't think it was 27. Do you remember, Shexta? You looking to see? Yeah, I can't remember either. I know I said 411 something. It's in the thesis channel, I think. But all right, because I can't remember if it was actually for 27 or not. Let's just stick to 411. I at least said 411 for sure. I'm having a blank. I'm drawing a blank on the damn change. But anyway, while we're down here on 402 or 402, what have you. Actually, it's in our bullpen too. People are actually making fun of me, calling me out my name and all kinds of silly, being very condescending, right? Yeah, because they're thinking, oh, we've had 1, 2, 3 gap days, right? We had 3 gaps, and they're like, there's no way we're getting up there, right? That's exactly where they're going. There ain't no way we're getting up that high. Okay. I said, I'm just gonna keep my mouth shut. I'm gonna teach y'all a lesson. I'm gonna teach y'all a lesson of humility. Why and how did I know this is gonna get there? Look at this. Oh wait, y'all don't understand volume yet, do y'all? Oops. So when you see this kind of action going on, right? I didn't have a doubt in my doggone mind. So of course, when we got up to here, all of a sudden the same people that were criticizing me, telling me that, oh, we're not going to get there. You need to calm it down, Chief. You're being bold. You ain't Nostradamus and all kinds of silly mess. They got quiet. All of a sudden, even crickets were shocked. They were speechless. Nothing. Okay? This is how you do it. Silly enough. This is exactly how you do it, folks. This is how you find levels that are going to work out in your favor. Now, do not get me wrong. That doesn't mean sit there and try to grab. We were out here like 402. They say you buy it around 402, and then you want to try to buy and hold till 411.27 with no stop loss. Again, that would be gambling. No matter how sure I am about a position or where she's going to go, I will always understand when I say this. Capital A, always have a stop loss. Because at one given point, I can be wrong. According to my students, I am 80% of the time right, 20% of the time wrong. 20% of the time wrong can decimate your account. Okay? It doesn't matter how right you are. If you don't have a stop loss, you will look like the most worst trader out there no matter how much you win. And that's going to be a very significant thing for you. And you're going to wonder, why am I not profitable when I am so accurate? Because you don't have a stop loss. That's why. You're not willing to lock in profits. That's why. And until you start locking in profits, well, you're going to continue to lose. Then that's just gambling. As I continue to iterate every single time. If you're not locking in profits, you're gambling. If you're not cutting losses quickly, you're gambling. Okay? And if you don't have a trading plan before you even get into one single trade, you're gambling. And if you can't stop the habit of gambling, do yourself a favor, get out of the market before you blow your money and you end up finding yourself living in a box. I know it sounds harsh, I know it sounds ugly, but that's just the doggone truth. Go to Vegas. Go to, go to LA. Hell, come to Atlanta. Ask them, how'd you end up here? Most of them will say, in a roundabout way, gambling. Gambling with their life, gambling with their finances, gambling with their decisions, just gambling. Just no real understanding of risk. So, now, the potential point of this going from 405.81 all the way up, where's the target? Where can it go if this continues to run? Now, will I go for this? No. 428.22. If this continues, if this is just a simple S curve, again, let's pull back in here. If that's all this is, just a simple S curve, 428 is on the table. Okay? But just from point A to point B, let's check something out. Make sure you mark this in your books, guys. From point A to point B. See that little box down there? Right? 17 bars. 17 candles. That's 8+%. $30+ dollars. 22 days. The days is what's more significant than anything. Days. It took 22 days to complete that trend. That's 100% right there. This trend took took 22 days. I know you're asking, why is that significant? Because if you want a trend to go a certain way, if you're wanting to swing, you need to know how long does the average trend take to complete. Look at this one. All those red bars. Look at that 3-bar play, folks. 3-bar play on the daily chart. So all this 3-bar play, folks, if y'all wonder what that is, this is this big red bar. You got a resting bar, green resting bar, and a long red bar, right? The igniting bar. Now, this is on a daily chart, so I'm not sure how well I ignited. What day is this? Hang on, I gotta get all that real quick. What day was you? Oh! Oh, I know that. We all went puts that day. I know you. I know that day. So, oh my goodness. Oh my goodness. Some caught it, some didn't. But yeah, I say everybody caught it. Just some caught all of it, some caught most of it, some caught some of it. But yeah, that was a fun day. Anyway, that is a 3-bar play. As far as I know, that was coined by a gentleman named Jared Wesley of Live Traders. I use that term all the time, 3-bar play. Here in the bullpen, we call this, we call this a 3-bar play, but this is not just some silly green resting bar. We call that the blood clot. It's bleeding. You got a blood clot. Bleeding. That's what we do. We call that the blood clot in a 3-bar play. So when you're looking for a trade, right, it looks like a reversal. Yes, first thing you hear us say, watch for the blood clot because you got a potential 3-bar play at the bodies. You know, right here at the bottom of the bodies, you take your entry right here, and then you might get a continuation, which you did. So, yeah, I always hear somebody try to say, oh, it's right here at the 50. It's going to rotate, but watch for the blood clot. Sure enough. Boop. So, anyway, yeah, 3-bar plays is coined by Jared Wesley of Live Traders, but the blood clot's ours. We call that was actually coined by one of our guys right here in the bullpen. Jokingly saying it, but now we use it as a trading term. Anyway, so if this is just a S curve for a continuation, that's the possibility you can go to. Do you want to mark the level? Yeah, sure. You can mark it if you want. Here, let me back out. Let me back out so you can see it again. Right? There you go. Right there. 428.22. If you want to mark that out. Matter of fact, you can mark all this out. 428.22, 442.07, and 464.48. Why do you want to mark these out? Well, because y'all are very biased and you think it's going to go that high. That's why. No, really. Why do you want to mark them out? Because it looks like a really good potential of a pop up. All right. Let me give you a little secret right here. I said something earlier that I'm sure a lot of y'all probably wondering. My guys see a pattern that we follow a lot, and that pattern is typically a very strong and reliable pattern. Now, before I say anything, look at this chart real quick. This whole chart right here. I'll even help you out. It's in here. It's in here. Do you see the pattern? Do you see it? Do you see the pattern that might tell you that 428.22 is very much possible? Or even 442.07 is very much possible. Do you see the pattern? Bullpen. Speak up. Do you see the pattern? Yes, you did see the pattern. Great job. Mr. Never said a damn word. All right, so the pattern is this. You get the bottom. You got a lower high. Or is that higher? I'm saying it backwards, my dumbass. You got the low. You got the higher low. You got a higher low. Not much of one, but it's there. This is called the rising valleys. The rising valleys are very prominent, just like the falling peaks. These are three falling peaks up here. 479.98, whatever the fork this is, 461.85, and then of course down here at where are you at? You stop moving around. I was on a roll. Why are you messing up? 431.73. Okay. This is a falling peak pattern. Now, those of you that love patterns, this is how you find patterns on a daily chart that tells you why you should be watching. Oh, crap. Did y'all see that? Oh, let me do it again. Reversal. What? How do you know that? Right? So, you got your three falling peaks. So when you hit here, a lot of people are buying calls. Say, oh, we're going up. Yes, we did it. Everybody in my group, I called it. I told them, we got here, falling pattern. This thing's going to tank. Three falling valleys. Whee! All right. Sure enough. Matter of fact. Oh wait, sorry. I forgot. This is this right here is pre. This is pre 350. This is I was in another Discord at that time. No, it wasn't this. It wasn't our bullpen. We're in another Discord at this time. Here we are. This is where I called it. This is post. This is post bullpen. When we got into the bullpen, three falling patterns. We get to here. I actually have it in our thesis channel for those of y'all want to see it. It's out. Everything's dated. It says right here, if we can't get above and hold above this trend line, right? Matter of fact, hold on. I think I still got it. Macro. Bam! I knew I still had it. So right here, if it stays above, if it can't stay above this purple line, we're going to drop because it's the three falling peaks. We got to here, sure enough. People thought I was wrong, doggone. They thought I was wrong, but sure enough, it did. Let's zoom in here. I said, y'all want to fact check this? Go to our thesis channel. It's in there. I even got it wrote out. Right here, if anything, grab it. Once it's moved up, there's your entry. right here, right, market open, there goes up, and she just drops. Oh wait, that's a green candle, dumbass. So of course, she drops down. You can't do anything. You can only get in when she comes down, right? So actually, it was this one. You get in over here, and then of course you're able to ride her down. Now I have a line here. This little line right here. Y'all want to see what this one is? This is how my trend lines go. This goes all the way back to June 18th of 2008. Okay, that's how strong that line is. Okay, trend lines. These are trend lines, not this bull crap that people sit here and draw out like they're in a coloring book. And yeah, forget the system. It takes a second. It draws these little lines on the intradays like this. Not that one. It just draws little trend lines. These are a lot more significant than half the crap people do that don't make a bit of doggone sense. Let's get into here for a second. They sit there, draw a line. Says, oh, you draw a line here. Then you draw a line here. All of a sudden it breaks under here. Oh, we're going down to 380. Sure enough, she bounces. What the hell? Right? And then all of a sudden everybody's starting to wonder why. Okay? Why is this going up all the time? Why it should be pulling back? It got here to pre-market. It should be pulling back. Yeah. Bite me. You don't know what you're talking about. So there's a difference between drawing lines to try to fit your narrative and drawing actual trend lines. What you're seeing on this chart today are trend lines. Not this bull crap you're seeing in whatever goofy ass Discord server with your doggone furu that's trying to give you call outs that you can't make $1 with if they paid you to be in it. No, these are actual trend lines. Trend lines, this just looks like a damn mess. I was fooling around with my macro. Forgive the mess. Let me clean this up a bit. Oh my god. I'm just looking at this. Oh my gosh, this looks so messy. I meant to draw a lot of these lines on the default or mapping out. I actually have what's called a mapping out section. Let me show you. Over here under drawing set. See, I actually have a spot called mapping out. It allows me to do all this crap on mapping. If I like what I see, if I like what I'm looking at, I'll then switch it to one of these up here. And that's why this looks like such a mess, because I was mapping out on the wrong damn drawing section. So that's my fault. That's why it looks this thing look. I was just looking at, oh crap, this is such a damn mess. So anyway, let's get back into here. I gotta re-clean all this up later. So anyway, so you're able to get it, you're able to grab this drop, but here's the beautiful part. I don't have it in here. It's in one of my theses. I think it's in one of my theses. But these guys are here. They have no problems correcting me if I'm wrong. But when we were around here, I stated. Matter of fact, I think somebody could probably pull it up in our thesis. That I stated that if we can get over 398 something or another, again I can't remember the exact. But if we can get over 398 something or another, we can get all the way to 410. If we get all the way to 410, then we can then see the rejection of 410 and go from there. Drop. Sure enough, pre-market, I think we actually got to 414. And of course, she comes down, opens at 410, comes down a little bit, and just tanks. Everybody in my channel. Okay, in our bullpen, we have a trading floor and a bullpen. Everybody was actually on the trading floor. Trading floor is the voice channel, if y'all are wondering. The bullpen is the actual main lobby of our server. We do not do call outs. I do not say buy puts at 410 and then write it down. I don't do that crap. No, I analyze live in the trading floor, which is a voice channel, and I give you the what's, where's, when's, and how's, and how comes. Okay, if I don't give any of those, then chances are I probably just ain't got a clue. I'm gonna watch and see what happens. But in this case, I called it clearly on the hourly chart. This bad boy No, was it hourly or 15? Let's see. I gotta pull back. What day is this? December 13th. I was gonna pull up on my 15-minute chart, my little 6 charts over here, real quick. That should do it. I'm trying to find you exact. Trying to at least get one doggone thing exact for you guys. Hold on. Yeah, 13th. Yeah, one quick second. I'm pulling it up now. This is not easy. It ain't easy being cheesy. Let's see. Almost there. Goodness gracious. I'm trying to give you the exact timeline of when this bad boy actually, struck gold, if you will. Let's see. There we are. One more day. I know y'all can't see what I'm looking at. Just bear with me here. Because in a second, you're about to see it. Because once I get it set up, I can show you what I'm blabbering about. There we go. Oh crap. Well. Crapper. Okay, hang on. I'm going to have to do it this way. Let's go 5 minutes. And let's go to 180 days. This guy is loading up, as you can tell. Whee. Hey, nobody wants you. Go away. Nobody doesn't care. Go away. Alright. Let's see. Way too far. Right there. Don't you like live videos? It's like slowest hell to see. I think this is the one. Yep, here it is, 13th. So this is what this is the day I'm talking about. We dropped down to the 5 minute. See what I mean? How I said she got the 414, right? Okay, got the 414. Here we are coming close to the open. Okay, here's our opening candle. There it is, 410, 410, 421, whatever it was. You don't want to break this thing. Takes too long to even try to break it down to the 1 minute chart. But anyway, as you see, she did a pull, and right here on the 5 minute, she tapped at the 10. Let's say, look at this candle, top right. Can be right here. You see how you see that little H right there, 10, 11. Watch. I'm gonna put my mouse right back to it. Look up there, 410.06. There it is, 410.05. It gave you ample enough time to grab this and ride this bad boy down. Okay, and for those of you that likes the pattern that I run with, the BART people. So look at that, the BART. So anyway, this was CPI, if I'm not mistaken. I do not follow CPI. I do not follow FOMC. I do not follow the news of whatever is going on. I don't follow any of that. What you're seeing me do right here is I just read the chart. I chart out what I see and I go from there. That's all I do. Okay? And by doing so, Uh, Again, fact check it by coming to the Discord. I'll give you free access to go play in our thesis channel, and you can see it yourself. Everything mapped out before this here even played out. Okay, how you like them nuggets? I actually have it in a thesis showing that I call 414, or actually it was 410. I called 410 before this mess even happened. Even if I'm mistaken, I dropped that thesis somewhere around here. It was around this time frame is where I dropped it. Because like I said, not too long after I dropped it, all of a sudden this thing just took off. Okay. Sure enough, we got up here. And then, of course, it erased CPI. Ain't that nutty? This whole thing erased CPI. And right now, what you're learning today is how to do exactly what I'm doing now. Is to figure out all these setups so you can take them just like I do, and you'll be able to make profits, money, be able to catch these, right? Because you know how many people probably bought calls here and then got burnt because it went the opposite direction because of this crap right here, because of pre-market, right? This looked like a BART right here. Okay, if you wonder what a BART is, by the way, it's the breakout and run, breakout and retest and run. Okay, this one did. This one broke out, hit, and then dropped. Why? Well, for me, it did. It was the opposite. Because this was already expected. When you have, just like red candles, when you have a big green candle and they start getting smaller. Look at that. Big. Momentum. 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 Oh. Not medium. Small. Small. Smaller. Smaller. Crap. Ow! Oh, we got. We're getting there. We're getting there. Getting there. Uh-oh. Look at this. Right here, 410. Look at this. Notice the action here. Price action here. Notice the candle here. Notice this one here. Then notice the wicks. Conservatively, you could have got in here. It took this to market. You could have conservatively got in at half this candle. It took it to market. And you could have aggressively got in, which a lot of my guys did, because I called this out with every explanation under the book of why she was going to drop. Legitimately had a good explanation and on the chart showing why she was going to do such a thing, and she did. A lot of my guys bought right there in that area, in this area right here. Some only sold, some only held to the green line, others held all the way down. Me, I rode this bad boy all the way down to about, I think it was like right here. I think is where I got to. I'm reviewing the chart. No, there it is. The purple line. This little purple line I got right here. That's where I rode it to. I didn't even ride down all the way. It was right there. So that's how we took it. Now, you think, oh wow, you made thousands of dollars, right? No, I actually. Wait, did I? No, sorry. I only had like one contract on this, so I think I made like $500 or something like that. So off that whole run, one little contract. One contract's 100 shares per contract. So, and again, I can teach you the mathematical equations between point A to point B of why I only made like $400 something. So anyway, but hey, again, single wins. I take the single win. I'm happy. It's good money right there off that silly run. But anyway, I just wanted to show you that real quick of how we are able to take these kind of trades and how do you find them? Well, exactly what we're doing. Going back to the daily is how we take these, define these moves to be able to do exactly that. It's crazy enough that you're seeing, right, you got a sneak peek just off of looking at the levels that I have now, right, in this macro of, I got to redraw this macro. You know what? Y'all gonna see me do this now. I'm gonna redo this macro. I'm not gonna do it today, folks. Don't worry. I'm gonna do this. I'm gonna do this another day. I'm actually gonna redo my macro completely from scratch. Bam. See? Gone. I'm gonna redo my macro from scratch. That's just too messy. I don't like a messy chart. That's too much. I had like 3 different drawing sets in one, which wasn't supposed to happen. That's my fault. So just go ahead and get rid of it. I'll reset reset my macro. So why did I call that a macro in the first place? Because it's the bigger version of the chart, right? It's the macro, meaning bigger version, bigger trends. Bigger trends gives you a better idea where the smaller ones are going. Each candle, right? We'll get back to the Fibbies in a second. Don't worry. Each candle has been battle tested. How do you find out how that battle took place? Well, green, red. I'm kidding. You dial down to the lower time frame from a daily to a 4 hour, 4 hour for a 1 hour, 1 hour to a 30, 30 to 15, and so on and so on. So you want to see what happened in that battle. Like this little candle here, right? Did that candle actually just shoot all the way up like it looks? Or was there a battle? Did this thing just chop around and move around, chop around, move up, chop around, drop down? What happened in this candle, right? How did this battle take place? That's where the lower time frames come into play. You look at those lower time frames in this candle, and you see what happened in this battle. And then you have a better idea and understanding of what to look for, and even what direction she might be going just by understanding how this candle was actually formed. So kind of keep that in mind. Back to the Fibbies. So, oh yeah, we were about to map out this 428.22 before we went on that roller coaster ride of whatever we did. Good thing this is being recorded. We can play it back later. Yay! Let's see. I hope you guys are getting a lot of information here because I'm trying to make sure you get your money's worth. Oh wait, you didn't pay nothing. Trying to make sure you get a great education today on how to do this. And you know, if you can't stick around, it's okay. It's being recorded. We're live on YouTube. And it'll stay right here on YouTube forever until somebody says, hey, what are you doing? Let's see. Go back down here. Yeah, you're fine. And yeah, that's good. Oh, wait. Just missed that by $1, didn't I? Let's see. Supposed to be 428, not 429. Just missed it by $1, didn't I? What the hell? All of a sudden I can't type with the damn. Sorry, this is not technical difficulties. It's human error. Give me a second. There we go. So again, looking at 428.22, right? Check this out. Let's evaluate that over here to the other side. Look at that. Look at that. We're just going off of fibs, man. Look at this. Just fibs going off of just mapping out the trend that we're looking for, right? Look at that. How beautiful is that playing out? You guys getting y'all starting to feel like y'all getting a good education today? Y'all seeing how well these are moving out? Right? So let's see. Well, now we gotta figure out the other side. We got the top side. We got some decent little levels right now, all right? We got some room to play with. Now, what if she goes this way? That's dangerous. Well, first things first. What do we do, folks? Break out the Fibbies. Fibonacci extension. Well, from up here, Fibonacci extension told us that this was the, well, not Fibonacci extension, Fibonacci retracement told us that this was the potential bottom of our downtrend. Well, that being said, now that we know this is the potential bottom of our downtrend, next is to find out if it is the bottom, where can she retrace to? Always ask questions like that. If you're the top, where's the bottom? If you're the bottom, where are you going? Well, Let's see. We've already pulled back under 387.46, and we almost got a full retracement down to here. So this is too much, right? It's way too much. Like, the fibbies don't work. No, they work. Relax. This is just the wrong trend. Okay. So when you see something like that, don't go, oh, these things don't work. No, they work. You just hit the wrong trend. That's too far extended. We're obviously about to go this way, but we're trying to find the potential move of it going this way. So let's get back over here. And we'll go to this one now. So way over the top, we'll come up here near 428. Down, back down here to the to our lows. Back up here to the high of this trend. Ah, look at that. Now we're getting somewhere. Look at that. Now we're getting somewhere. We're gonna drill down a little further. Don't worry, folks. We're gonna drill down a little further. Right now, we're trying to find us some areas of looking. Look at this. I like the significance of this. 399.97. Now, can we go from 410 to 410.44 to 399.97? Actually, yes, we can. We can do that. Why do I think we can do that? Well, check this out. Here's your fib. Here's the high of this move so far. She is at 100%. Look at that. 30.99.97 is at 23.6%. So yes, it can. It can come down to there. Oh wait, I can't read it. I can't read shit, can I? At 38.2% is where you see 399.97. So yes, it absolutely can go that far down. If she decides to gap down instead of going up from 409.19 and decides to open up at 408.76.72 and continue going down, you're absolutely right. 499.97 can in fact be a next target. Yes, sir. So keep that in mind. That's why I want to know, because we already saw the one Fibonacci extension. It stated that this uptrend that we're in now, this is 100% of the move. Now, can it get to 161 points, whatever it was, percent move? Yes, it can. But again, let me stop real quick. Expectations. Something a lot of people keep messing up on is expectations. They have expectations on their trade, but they never figure out how to have a healthy expectation of the chart. The chart tells you what to expect. The problem is people's expectation of what they want out of their trade never correlates with the expectation of the chart. And this is where a lot of trades go wrong. Well, I saw going to here, so I put my entry, I put my exit here, but I never got here. Well, that's your expectation of the chart. That's not the chart's expectation of where it's going. Remember, you can never tell the chart where it's going. That's just silly. But the chart will always tell you where it's going. So the moment you start getting in tune of what the chart is telling you versus you trying to tell the chart what to do, the more likely your trades are going to complete, and the more likely you're going to be able to walk away with profits and be able to become more of a all or nothing trader. Meaning that you put in your entry, got your stop loss, you're just running, you move your stop loss to break even. Break even meaning you move it up a couple of dollars above your entry, which helps covers for commissions and slippage. And then, of course, you let it run. You let it do its job. A couple of dollars in profits, not a couple of dollars versus your entry, by the way. For those of you who's like, damn, let's go higher $2. You know, you just $2 in the profit. Like I said, cover commissions and slippage. And, of course, she runs, she hits target. You take target, you take profits. You are now becoming slowly but surely an all or nothing trader. And if you're losing trades, like we got a guy here now, his losing trades are winning trades. Go figure this one. His losing trades is still $2 in profit, $8 in profit, $3 in profit, because he has learned that he's an all or nothing trader. So Once the trade gets in, goes the direction he's expecting it to go, because he's watching the expectation of the chart, not the expectation of his trade. It goes up. He sees it going up, so he's okay. Move a stop loss to break even. Now he leaves it alone. He will watch this thing keep walking, and he will even bracket in on the trade as it's going in his direction, because he's going for the target. And then, of course, once he gets the target, he takes profit. Okay. So when it don't go his way, because it does go up, right? It looks like it's about to go your way. He moves the break even. Sure enough, it stomps him out. He's walking away with like $2-3 on a losing trade. He's still winning $2 or $3 on a losing trade. How ridiculous is that, right? And that's the whole point of cutting losses quickly. If you cut losses quickly, your losses will be just irrelevant, right? And that's the goal. People think you can get to where you'll never lose at all. That's not true. You are always going to lose, right? There's always going to be a point where you're going to end up even in a really horrible losing streak. The trick is that little golden nugget, right? I've been giving you a lot of golden nuggets today, so I hope you've been taking notes. That little golden nugget is cutting losses quickly, making sure that your max loss is at least 10, maybe 20% of your max gain. So, for instance, if you have a max gain being how much you expect to make for the day. I want to make $200 or $300 for the day. So that means my max loss needs to be $25 to $30 for the day, maybe $50 for the day, because my max gain is $200 to $300 for the day. So that way, even if I hit my max loss for the day, I'm nowhere near yesterday's profits. I hit max profits. I hit what I was expecting to make for the day, $300. I made $300. I made $300 yesterday. I lost $50 today. $50 is my max loss for the day. Cool. Wash my hands, call it a day. Watch the chart. Watch the market as it plays out. Sit on my hands, as it were, and then let it keep going. Because again, here's another little golden nugget for all you new people out there, you rookies. If you feel the need to take a trade, chances are you don't need to be taking that trade. Chances are you need to sit on your hands and force yourself to stare at that chart and watch that little price just run off without you. And I mean, wave goodbye like it's on the Titanic about to ride its ass on. Just watch that bad boy just get on going. Okay? You need to watch that thing just go away and just keep so-called printing while you make nothing. Because until you can get out of that need to trade, you're going to trade everything. And when you start trading everything, that is also a form of FOMO, fear of missing out. When you're trading everything, every time the SPY wants to twerk, you're getting in. Oh, the SPY made a pivot. Buy in. SPY made another pivot. Oh, it looks like it's about a reversal. I see a 3-bar play. Every time it twerks, you're jumping on it. Okay, you got to stop that. All right. The minute you stop that and start realizing I don't need to trade everything. I need to focus on the opportune moment with the opportune entry, put in my doggone stop loss, and ride this thing to all or nothing. Make sure I put mine at break even when she moves up. By having a trading plan that actually gets you to where you want to be is only how you're going to get there. By continuing to jump into a trade and not have a trading plan whatsoever, max loss, max win, how to get in, buy setups, a potential pivot point, low end, high end, support, resistance, demand zones, supply zones, something. You got to have a trading plan written out on a piece of paper saying this is what my expectation is for the day. If the SPY, because we're looking at the SPY, if the SPY does this, I'm going to get in here, stop loss there, going for target here. If this plays out, I will ride it to target. If it don't, my trade is done. As long as my trade is completed, one way or the other, I get entry, it stops me out, that is a completed trade. Maybe a losing trade, but a completed trade. If it goes in, goes up, and I can move up to move the stop loss to break even. And let's say she goes up, don't hit target, hits me out. Guess what? Still losing trade, but completed trade. Did I lose money? No, I hit it at break even. Remember, a little bit above my entry, so it covers losses, potential slippage, and commissions. I walk away with nothing, not a scratch. But it is a losing trade. That is something I need to diagnose and do diagnostics on to figure out what happened. Why did this trade fail? Why am I getting stomped out before she runs? Why am I getting stomped out? Period. Because the point of an entry is to be getting in at the correct moment to where she goes my way. So, and to go to target. That means if it's not going to target, chances are you're not in the right place to be getting in the first place. Maybe you allow something to interfere with your buy-in in the first place. Maybe you're just not reading the chart correctly. This is why this is very important to make sure you have a trading plan and why we study the charts like we're doing today. Drawing up fibs, drawing up levels, figuring out where things fall. Looking at the levels to the left. See if they correlate with any other price actionable trends. If they do, then I know that the levels are a lot more stronger. If they're a lot more stronger, that means my ability to make more money is or has grown a lot more significantly. I'm able to make more money, which makes me look like a genius. All of a sudden, I'm 80%, I'm always 80% winning. Why? Because I take the time and figure out what the chart is trying to tell me, right? Again, the SPY definitely loves its patterns. There's equities out there. Once you get to know it, they love their patterns. And once you get in tune with those patterns, like I said before, you find yourself winning more, right? And you start looking like a genius to people. When in fact, all you've done was just gauge your expectation to the chart's expectation. All right, now back to where we were doing. Again, I hope you guys are taking notes. There's a lot of juicy stuff in here, and once I get out of my my mode, I'm gonna forget everything. Good thing we're recording this, huh? All right, so that's 100% the move. We are looking for. All right, I want to say let's go ahead and let's break this in. Right there. All right. All right, there's two things I want to do here. I want to put in these levels here. Let's see. 404.63, 497, 396.46, and then of course. Let me get rid of you for a second. Oh, I feel like I'm about to get rid of the wrong one. Nope, I didn't. Okay. Yeah, 392.81. So I know y'all can't see the other screen. I got a dual screen. I'm looking at the lower time frames on the right hand side. At the same time I'm watching these. And like I said, we'll drill down. Once I get these levels in, we're going to drill down and then go from there. But right now, any questions so far as how to do these, how to actually work these, how to find better levels? Any questions so far on what we're doing? All right, so far. One or two things is going on. Either I've answered your questions very well, or everybody finally said, I'm out of here. One of the two. Let's see. As one of my guys say, nobody wants to listen until they start losing money. And all of a sudden they want to listen. Again, this is the most simplistic way I can go about teaching you guys how to draw these levels up. Now, I'm kind of hoping I do find one that don't mesh up, because I'm pretty sure that's a question that's being asked right now. You know, what if it doesn't match, right? That's a definite doggone good question. What if it doesn't match? Well, the point, if it doesn't match, then chances are it's just in the wrong spot. So we get rid of it. It's not rocket science. Just get rid of it. So do we ride this all the way to 100%? No, we do not. We do not ride it to 100%. What I have, okay, let me finish this up. Let's talk about trading plans, right? Because people seem to have the notion that they have to write them 100%. I'm going to adjust these in a second, right? I'm just trying to get them close so I don't have to do too much adjusting. People for some reason people get the notion that they have to ride it until the wheels fall off, basically, right? You know, they're like, you know, I got to run this till it stops. And the thing is, you don't. We're gonna go over that too. I'm gonna give you a trading plan that not only works for me, but that will work for you.